Hi, Dean Jenkins with FollowMeTrades.com, and this is the market update for the week coming up of March 16th, 2020. And it ain't over by a long shot. We're seeing some historical moves in the market, and of course it's in response to the coronavirus outbreak. And last week we saw some dramatic developments. We had the Fed out of cycle announce a rate cut, and we had the president declare a national state of emergency, and then over the weekend the Fed announced yet another rate cut out of cycle, and it does not seem as though the market is impressed. So if I'm looking at the futures chart, here's a 10-minute chart of the S&P 500 E-mini, down 128 points, about 4.79. And if we go look at the Dow, it's the YM, just real quick, down over 1,000 points as of the time of this recording. So that's certainly implying a down open to the market Monday morning. And I'm looking at a weekly chart of the S&P 500 right here, and you can see we've got this correction going on. I had identified last week this purple line as a potential support area, and we closed down through it. Now the market went down and then rallied up on some stimulus announcements on Friday, but given the overnight futures, it does not look like that's going to hold. So it looks like more lows to come, and the midpoint of a correction on this weekly chart, we've been in an 11-year bull market. It's gone up very nicely, up to incredible highs. But we got a real correction going on. We went down through the 200-day moving average, this white line, closed above it, but it did breach it. And so the midpoint for this correction on the S&P 500, which I think is the important index to look at, about 2116. And I think that's looking very realistic. We'll have some continued volatility. There'll be some up days, some down days, but we of course are biased to the downside. We've made some great profit on short trades. There may be some strength in some sectors. I'm doing that analysis now, and consumer staples, healthcare, a few other sectors may have some strength, and there may be some long opportunities, but there's also some continued downside for other sectors. So we're just going to be careful, play it safe, and take the very best trades and manage them well, use risk control at all times. But the big picture is, we're in a pretty serious correction, and over time we got more lows to come. That is a near certainty. And so we'll be watching for that. We'll be trading accordingly. So there has not been strength in gold as yet. We haven't seen the typical flight to quality that happens during a correction. You can see gold last week pulled down, but the overnight futures are up, and if this heads up, there could be some opportunities in gold, precious metals, other kind of flight to quality instruments. So we'll be watching for that, and it's got to prove itself before we will just jump in. Meanwhile, we are keeping our powder dry. Actually, in my pick service, we have 0 positions. We closed the last ones Friday for really nice profit, and we're going to be very careful. But when good opportunities with high probability outcomes present themselves, we will be jumping on them. So we got plenty of capital available to do it. So stay tuned, and we will give updates as things develop. All right, thanks.